Hi everybody, Alex Employee here from Expert Forex, and in today's video I'm going to show you why those optimized settings that you get are so damn unreliable, and also, more importantly, how you can fix that. Very important video. You need to watch this if you are using any optimized methods of finding setting. And we're going to be looking at the advanced methods of optimizing to get the more sensitive and meaningful settings. Now it's a beautiful day out there, and that is why I'm wearing this shirt. Just have a look at the idyllic weather out there. It's a beautiful spring day, and I thought I might celebrate that with a nice happy shirt. So today we're going to be talking about more advanced optimization techniques, and on your screen you can see a triangle or a pyramid which shows that the basic optimization techniques are the ones that are most commonly used, where one would optimize a period backwards to find the best settings that worked for that particular period. And that is where a lot of traders stop. They don't go any further with their optimization experience, and that is why they have a very limited view of what is actually happening in the market. Now in this video I'm going to open your eyes to a different view of optimization and optimized settings, and that is why this is an advanced optimization video. We're going to be looking at questions like which settings work best in different market phases and in most market phases. Also, there's a lot more advanced stuff that I can't show you right now. I will do that in the course of the next few months. As soon as I find a lot of people moving into this advanced optimization phase, and ones that really master the basic optimization activities. You can't go from the basic one to the advanced one unless you've really mastered those basic ones. Now, to just give you an idea, it's very quick to master those basic ones. I have some material for you, and here is a course. It's a 8-video course that you can go and do, which gives you a basic overview of optimization, how you would optimize a particular EA. Very good course. Do it, and that will give you the fundamentals. And there's the link. The clickable version of the link will be available in the description as well as in the first comment of this video. There's also a very much easier technique which I call the I wonder technique, and that can also have a look at this video to give yourself some ideas on how you can start getting into the basic level of optimization. Again, there's the link, and I will make that available in the description of the video. Okay, so what prompted this video was a post that was made in the forum, and here it is on your screen. I'll go through the post. I'll partially answer it, but after viewing the contents of this video, you'll understand how some of these questions would not be asked if there's a knowledge of actually the right way of optimizing an EA. So let's have a look. How many years or weeks or months before the present, in other words backwards, would I use for optimization? So I get that question a lot. How far back must I optimize to get realistic results? Now I can tell you, the $1 million EA where I traded $5,000 to $1 million, I back traded that in 2 days. The minute I saw the EA, the minute I saw what it does, I didn't need to back trade it. I knew it was going to work. So when you ask how long should I be back trading, it's like asking how long is a piece of string. The short answer is the amount of time that gives you confidence that you can trade the EA. The other answer is you should be back trading history intelligently. There are aspects of history that will not repeat, like the price action that occurred over the last year, for instance, will not repeat itself exactly into the future. But there are elements that will repeat themselves. There will be sideways phases, there will be trending phases, there will be soft trending phases, there will be high volatile sideways markets. Those markets will repeat themselves. So back trading last year doesn't help unless you've broken that market down into the phases that existed in the market, and you can understand which phases were the profitable ones, which ones weren't the profitable ones, which settings worked in the profitable phases, and which settings worked in the not so profitable phases. So you need to do that kind of optimization intelligently, and I'm going to be showing you that in this video. Then the next question, how good is the market during the COVID for optimization? Okay, good question. Again, what is happening in the market at the moment is most probably not normal events, but there is no such thing as normal events, because every now and then things happen. There's the elections, there's all kinds of things that throw the market into a bit of a whirl. But certainly the COVID has caused some incredible trends in the market and has caused the market to be a little bit more unstable than it should be. The other question is, what happens when they announce the vaccine? They finally finalize the vaccine. Suddenly the markets are going to go all crazy and do all kinds of things. So we don't know what lies into the future. But it's a very valid question. Should we take into account this period where the COVID activity is happening? And again, when I show you how we break the market down into phases, it will answer the question quite nicely. So what if I have done all the optimization and the forward testing fails? Now let me tell you what, it is likely to fail, because that is Murphy's Law. If you go with one set of optimization results and you try and plug it into the market on one currency with one setting, your chances of failure are huge. And that is what I'm going to show you in this video. You cannot do that. You cannot go for the perfect setting, the perfect currency, and the perfect time frame. Impossible. Or possible if you are incredibly lucky. Incredibly lucky. So what would the next step be? And again, I'm answering the question. The next step is to don't start trading your optimization results. Analyze them a little bit further. And never trade one currency, one setting, one robot ever, because you are exposing yourself to exactly what is stated here. You will fail in the first week. We have just launched the 7 edge EA, and the market's gone flat. So now everybody's writing, oh, my EA is not trading properly. It's a trending EA. It only makes money in a trending market. You need to understand your EAs. People that are now trading the grid trend multiplier are happy as pigs in mud, because the market's going sideways. It's a sideways EA. We're not getting those questions from those people. But you need to understand your EA, and I'm going to show you a little bit about that later on. So why will there be different results on different broker accounts? The price in Forex market is essentially the same. Good comment. Look, this guy has thought things through very carefully. That's why I'm featuring this post. He's asked really intelligent questions, and surely the only difference would be the spread and that type of thing. So unfortunately, it doesn't work that way. The brokers, and we encourage all our traders to first test their EAs for a period on their broker account to see what happens. We have found amazing differences from one broker to the next. Now, there's various reasons. The price feeds are generally the same, but they are not the same price feed. So some brokers use XYZ price feed, and other brokers use other ABC price feeds. So the price feeds aren't perfect, but they're pretty close. Then the spreads aren't the same. Then the setup, the broker can set the MT4 platform up they want to. So every broker has a little quirk in the way they set their MT4 platform up and how they structure their instruments, what kind of margins, what kind of this, what kind of that. That's how they structure. But the most important problem really is the cut-off times on a Friday. Some brokers close early, others close a lot later, 3 hours or 4 hours later. So you have brokers trading up to a certain time, and then others that trade on for another 4 hours or so. And the same thing happens on a Monday morning. So those guys that cut off early start trading a little bit earlier on a Monday morning, and the ones that closed off late start trading later on the Monday morning. And what that does, it messes up the candle formations, even the 1 hour candle, because you've got 3 more candles on the side and 3 less on that side. So the indicators all go crazy because they don't have that. And we've noticed on the 4 hour indicators, they really do battle with that particular. And you think it's a small thing. You can ignore your broker differences, but you do that at your own peril. And I've learned that is about the worst thing you can do. You need to test everything on your own broker. And that is why when you use a set file, the first thing you need to do is calibrate it for your particular broker. Test it, back test it again, make sure that it aligns with the original set file results. During this video, you kept on getting better and better results, but the drawdowns also increased. Trying to manage drawdowns is one of those activities that will make you gray and old like I am, and you will get nowhere. Drawdowns are what makes profitability. So my philosophy has been, I never fight a drawdown. You manage your drawdown by using another robot that has the different profile. So when this robot has a drawdown, that one makes profit. And when this one has a drawdown, this one makes profit. So that's how you manage drawdowns. You don't try and over-manage drawdowns, because that's where the profitability comes from. You manage it in different ways. And the portfolio approach is ideal for managing risk. Drawdowns and a whole lot of other things just disappear the minute you start matching EAs that are, this one makes profit when it's trending, and that one makes profit when it's sideways, and you start doing that with currencies and time frames. You can factor out so much risk and sleep so much easier if you use a portfolio approach. I've spoken about that till I'm blue in my face, or I should say red, and still people don't take notice of it. All right, so I hope that answers your question. Don't worry about drawdowns. And also it says here, if the drawdown's 30% and I trade 3 currencies, I'll blow my account. Well, it depends how you measure drawdowns. So that's also a very deceiving thing that happens. Is there's 2 types of drawdowns. So there's a drawdown that happens from the capital that you've got in your account, so it will measure that drawdown. And then there's the drawdown that measures the drawdown at any point in your trading history. So it will, let's say you've made, started with 10,000, you've made 20,000, and now you have a 10,000 drawdown. So you're back to 10,000. So that if you have a 10,000 account, you have a 10,000 drawdown, sounds tremendously bad, but it isn't, because you've made 10,000 profit as drawn down. So it's not that serious. So drawdowns, be careful. You need to understand how they are measured, and also to a large degree you should not have to worry about drawdowns. You manage them by using offsetting settings for the same EA, offsetting EAs for different EAs, and offsetting currencies and things like that. That's the way you deal with drawdowns. There'll always be drawdowns. Don't fight them. Okay, so that's just a first answer to this question. As we go through, you'll see a lot more answers coming out for these particular questions that were asked. But thank you very much for this post that was made, and I hope that I'm answering your questions. And the big thing here is, what I find is, for question 1, what the person is expecting is you should backtest for at least 12 months. They want a fixed answer. And when I say when I say to them, no, backtest until you feel comfortable, then that's not the answer they wanted, and then they don't listen to it. But and there'll be a lot of this going on in this video where I'll show you things that you don't like what you see, but unfortunately I that's the way it is. So you need to change your paradigm of how you think rather than fight what I'm saying. You can fight what I'm saying, but that's your choice. All right, so we're going to have a look at one aspect of advanced optimization, and how we're going to do this is we're going to take the charts and we identify different phases in the market. Not difficult, they're quite obvious when you look at the chart, but that's what we're going to do. Then we're going to optimize those particular phases, and we're going to get settings for a slow trending market and a sideways market and a volatile sideways market and all kinds of other things. We're going to get settings. Then we're going to test those phase settings to see which one is the most robust throughout the year. And then we're going to identify strategies and settings to use into the future. So that's another way of doing it. It's a much more intelligent way. It's not a thoughtless way of doing optimization. You're actually applying common sense and logic to the approach. All right, so let's move on. Okay, so now what I've done here on the screen is I've taken the pound USD, the daily chart. This is roughly a year. It's not quite a year, but it's roughly a year. And I said, all right, what phases have existed in the pound over this particular year? And you can see here's low volatility sideways markets. Then there's a little short trend. Then there's medium volatility. You can see the volatility there, and the volatility here is a little bit bigger. Then there was this quick trends that happened there, and that was the COVID, and that was one of the questions asked, what should you do about this? But you just regard it as a quick trend. And then you have high volatility sideways markets, like there's low, there's medium, and this is high volatility sideways markets. Then we have a medium trend. That was a short trend. There's a medium one. Then we have a wavy soft trend going downwards. And then we have a long trend. This is 1,200 pips long trend. So the pound went through various phases. Now already you should be realizing that no Forex robot is so clever that it can deal with all these phases. And if you are unfortunate enough to buy a trending EA, and the market goes into a low volatility sideways market, you will never make profit. And I'll show you that. So don't think, oh, this is a scam EA. No, you've got to use the EA as intended. And just another, while I'm saying this, is a lot of people, the first reaction, people, oh, I must stay away from a low volatility market. No, nobody knows when these phases start and when they end. Nobody knows. I can tell you now, nobody knows. So you cannot try and second guess the market. You have to be in the market all the time. So what do you do when you start in a unfortunate condition like that? You use low lot sizing or low position sizing. So we recommend you use 0.01 lots for every $1,000 that you have in your account. In fact, with this particular one, the 7-edge EA, we would say maybe use 0.01 lots for every $2,000 in your account. That's the way you control risk. You don't fight risk. You control it, you manage it. So there is your tool. Not, oh, I must use the Bollinger Band and I must use this and I must use that to try. That's not the point of set and forget EAs anyway. You just have to control it in a different way. A lot of people have this paradigm, this is the way you manage things, this is the way you manage things. I'm saying, think about different ways of managing things. So you use lot sizing to manage risk. Okay, so I can tell you now, nobody thought that this would go 1,800 pips one way in 10 days trading. Nobody thought that. And nobody thought it would recover 1,000 pips straight away afterwards. So nobody knows what's going on in the market. You've got to manage that uncertainty by being clever. So this is what we did for the pound. And then we went to the 7-edge EA and we created some periods. So we worked out the exact days where there was a low volatility sideways market, the exact days when there was a short trend, and so on and so on. And then we also had the total period, which runs from the start of the year to the end, and we also did a total. So what we then did is we actually went and optimize those periods. So we said, okay, I want to optimize a low volatility sideways market. I want to optimize a short trend market, and so on and so on, a wavy soft trend and a long trend, and the whole period. So we went away and we optimized. We found settings that work in a low volatility market. We found all those, and you can see how the optimizations came out. Very, very good results, and the overall result throughout the whole year is 37,000. Now that we always use 10,000 accounts, and we always use 0.1 lots in those 10,000 accounts. And the reason why we do it is not that we're suggesting that you only trade $10,000 accounts. It's because we can then compare any EA with any other EA, and 10,000 is a good, nice round number, and 0.1 lots is a good starting point. So that's why we do it. But you can trade a $100 account this way too, if it's a cent account. Now I'll talk about that later on. Okay, so we got those results, and you can see then we said, all right, well, let's convert it to dollars per day. Let's see which strategy gave us the biggest dollars per day. And obviously the quick trend gave us almost $2,000 a day trading the that particular trend. And you can see some of the trends were very bad, only $200 or so, but that's just another statistics. And then we created set files. Now those set files are available in our club to our club members, and they can go and play around with those set files. Okay, so that's what we did, and this is a starting point. So now we're a little bit clever. We've broken the market down into phases. We've optimized those phases. So then we went into the next activity, which is we then compared the settings with each other for that whole period. So in other words, here's set file 1, which was the low volatility sideways trend. If we traded set file 1 through all of those phases, what results would we get? And there they are. You can see in the high volatility it just crashed, and so on and so on. And we said, oh well, overall in the whole year we'd most probably make $18,000 profit. And the same thing then was set file 2, and down it went. That's how much we'd make if we were trading set file 2, which was actually meant for a short trend the whole year round, and so on and so on. And you can see some of the the best conditions for this EA is a quick, strong trend that goes at 1,600 pips. Now, but it does wonders when ideal conditions exist, but it bombs, and you can see the bombing out completely when normal conditions exist. So that is why you can't optimize an EA for only one set of conditions, or in general. You have to look at the dynamics within those phases. So although it made the biggest return, it also made the lowest overall return in the market. Set file 5, high volatility sideways market, also didn't do too well, but not too badly, 3,000 negative, and so on. And then we had set file, and you can see how now set file 9 is the whole period. So we're saying, what if the market was like this for the whole period, trading the overall optimized settings? And you'll see that wasn't too bad. If you look at it, it only makes a loss in the worst conditions. You can see these are the worst conditions. They virtually all make losses. And in all the other conditions, it actually made a profit. So that's pretty good. That's the overall optimization, and it produced quite good results. The other thing that you can see in here is that you can see when there's low volatile sideways markets, look at the total there, your chances of making a profit is just very low. Those were optimized settings, but overall your chances. So you can't run away from it. You can't try and oh no, we're going to, so I'm not going to trade this EA, because you don't know how long it's going to take and all that type of things. But all I'm saying is that this is a trending EA, and when it encounters bad conditions, you will make losses. Okay, and then the other thing is when it encounters good conditions, here, the strong quick trend, look at this. Any setting will make a profit. Any setting. So people go around and they say, oh, I want to find the perfect setting. Don't try and find the perfect setting. Try and find the perfect market or the perfect currency for in that particular market. Those are where the things lie, not the settings. People waste so much time on settings. But anyway, so you can see there's all positive going in there, and if you used any of these set files, or all of them, you would have made 116,000 profit. If you had used all of the settings in a bad market, you would have made 40,000. Now note, there's a profit in that. So a lot of people don't realize that if you just trade a whole lot of settings, you will make a profit. They don't realize it. Just look at this. Here we've got bad settings, good settings, whatever. The overall profit is $260,000. So, and this is the whole concept where the portfolio approach is so important. You have to spread your risk out. You have to use different currencies, different settings, different time frames, and different robots. And when you spread it out like that, suddenly, whew, overall, the results, some crash, some really have bad results, but overall, you have a nice return. All right, and there's a whole lot of other things we can read into these settings. You can see which ones have losing periods, like this one only has 2 losing periods, this one's got 3, this one's got 4, this one's got 6 losing periods. It is the best setting because it produces the biggest result, but it had 6 losing periods. There at 4. Now this one's only got 2, a bit like the first one, and so on and so on, and that one's only got 1. So now I'm asking you a question. If you had to use set files, which ones would you choose? And you should choose at least 3. So you must probably go with set file 9. That's the most popular. Here's one that's only been down 2. Yeah, and here's set file 6 has also been down only 2. But notice set file 1 and set file 6. Set file 1 is making a profit when set file 6 is making a loss. When set file 1 is making a loss, set file 6 is making a profit. When set file 1 is making a loss, set file 6. Now, are you starting to get an idea of why it is important to use different settings and in a portfolio when you're trading? Now, I know the first thing that's coming up in your mind, oh, I don't have enough money to create a portfolio. I'm going to deal with that problem later on. But don't limit yourself by the way you think. Okay, so can you see the beauty of this kind of analysis? You can suddenly say, set file 1 and set file 6 is a must. I mean, look at how they offset each other. Beautiful. You have an equity chart that's nice and smooth if you use those set files. And set file 9 is not bad. It's only been not profitable in the first month. Now, can you imagine that you buy this EA full of hope and aspiration, and the market goes into this low volatility? So you encounter the worst month ever in your first month. Now, can you also imagine the other way around? You buy this EA and suddenly the market takes off in a quick trend and you make huge amounts of money and you think this EA is the greatest thing since sliced bread. But then the market changes and you give it all back to the market. So very dangerous. Forex trading is not easy, but you need to do these more advanced things so that you can balance your risk and sleep peacefully in the evening. I can't tell you how peacefully I sleep because I'm using portfolio approaches. Now, again, just that set file 1 and set file 6 observation, which I've just seen right now, is actually a fantastic observation. You can also do that with other EAs. So in other words, if you are making a loss in this market using this particular EA, the 7 edge, you could offset it against the GTM because the GTM loves low volatility sideways markets, and you can offset it. So you trade the GTM at those times and that kind of thing. Again, you balance the GTM risk management through what? Lot sizing, position sizing. That is the way you manage your EA's risk. All right, so I hope you found this interesting. We've done the same thing. I'm not going to talk about it for the Make Money EA. We've done exactly the same thing. And we've created the same table for that. Now, you must realize that this is 9 times 9. We've done 81 optimizations for each table that you're seeing here. So we've done 160 odd optimizations. So it's not for lazy people, this kind of work. It's, you know, you need, and also not for people that don't know the basics of optimization. If you don't know the basics, you're never going to be able to do this type of stuff. So the Make Money robot is in fact in general more risk controlled. You see the amounts here are smaller, but also you don't see as many blowouts. You see 1, 2, 3 blowouts. Let's just go and have a look back at how many blowouts the 7 edge. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. All right, so you're starting to get a feel of the risk profile of these EAs. So the 7 edge has got a different risk profile to the Make Money EA. The Make Money is more risk controlled. You see the losses that the Make Money makes is more balanced, not that big. Also, what you'll notice is that the Make Money still makes a loss in that low volatility side, but it's a lot less than the other one, and it makes a profit in all of the rest, except this set file 6 has a small loss. It's not a big loss, small loss. So for all intents and purposes, you can say that any set file and any market condition worked well for the Make Money. Profit was made in each market condition, and profit was made for each set file. So you're starting to, you know, well, which one is the better EA? Which one suits your particular risk profile, and so on. So this kind of analysis is actually very nice, not only for a particular EA, but for comparing EAs to EAs. And when we do things like the Dream Machine, well, we can't actually do this with the Dream Machine that easily, but when we do it with other sideway market EAs, we can then map them across each other and see which market conditions are profitable for that particular EA and which ones are for this one. So, but you need this data. You just need this data. You can't work without this data. And overall, I would say the Make Money has still got its nose ahead in terms of a lot of aspects. The 7 edge EA is a more continuously trading EA, whereas the Make Money says, no, the market's not trending, I'm not going to trade. It's got that ADX filter in it. And that can show you, that shows you that it's made the losses are more controlled, but the profits are actually slightly higher. There's 369. Let's have a look what this one's 260. So yeah, make money is still got its nose ahead there. Anyway, but as you can see, this is the kind of work you do, and that's what I suggest you do. If you have any EA, go and break the market down. And remember, we're only doing this for the pound. You should be doing it for all 10 main currencies that you do, or even your index trading. You can do this kind of analysis, and it will give you an idea of which set files to use with which other ones. In this case, set file 6 again and set file 1 offset each other quite nicely. Here, set file 6 has made a huge loss. Here, it's made a big profit. There, it's made a loss. There, it's made a profit. There, it's made a loss. There, it's made a profit. There, it's made a loss. There, it's made a profit. There's only one instance here where they have both made a loss in the same month. They're both profitable, and there's a profit and there's a loss. So you can see again, by learning how these set files work and things like that, you can start balancing your portfolio to reduce your risk to a point where you don't have to worry about drawdowns. That answers the one question that was asked. Okay, so let's have a look at some of the conclusions that one can make from, and these are initial conclusions. There's a lot more. I'm just looking at it broadly. Different market conditions are difficult to predict. That's what trading is all about, but they are difficult. There are false breakouts and there's all kinds of other things. My philosophy is don't even try and predict. I'm a random trading type of person. Don't predict. Let the market do what it wants to do. It will anyway. You can't influence it. So just manage that uncertainty. And what I'm saying is don't try and be a perfect. You can spend the rest of your life trying to predict the market. It's not going to work very well, I can tell you. When the market is bad, and we've seen that in the tables, it isn't likely that any settings will save you. A lot of people think that, oh, the market's bad, I must change my settings. Well, no, just go with it. You're going to make a loss. Make sure that your lot sizing is such that you don't blow your account. That's the answer. When the market is favorable, most settings will work. As we've seen in the 7 Edge EA, the perfect market gave positive results for all the settings. So settings become less important when the market is good. You need to spread your risk by using a variety of high probability settings and currencies and forex trading robots. Forex trading takes patience to wait for good market conditions. Now you can see, we always do these things. We do backtesting and we look at a year and we don't feel the changes in the year. Now, as I said, you buy an EA, let's say, and you start using set file 3, which is positive overall for the whole year. You start using it, and then it has 2 losing months, and obviously you're just going to throw it in the bin. And the worst thing, because the next month it kills all the losses and makes a huge profit. Now that is forex trading. You either accept it or you don't. But I can tell you now, if you don't accept the market as it is, then you are going to be a very unhappy person, a very frustrated trader, and so on and so on. But if you are patient and you say, okay, I've made a few losses, I hope the market improves soon, and sure enough, there it improves soon. So and so on and so on. So really, patience is what I find the most difficult for new traders to deal with. They buy an EA, the help desk, 2 hours after they've bought the EA, they plug it in. We get an email saying, I've just bought this EA, it hasn't traded, what am I doing wrong? And they bought a trending EA, the market's going sideways, and what are they thinking? But you see, it's just a lack of experience and excessive expectations and things like that. So these tables show you, now there is no setting that doesn't have losses. You can see there are periods. Look at that. All of the settings have losses. You've got to you just got to accept it. Don't start over managing those losses. You're going to become very frustrated. Anyway, sorry, getting a bit excited about these things. Use other robots or other settings to smooth your equity growth. Now, setting 1 and setting 9 was a good example in the previous table. You offset your growth. So when the one's making profit, the other one's making a loss. But overall, both of them are making huge profits. So it's a case of smoothing the equity. So you can use your smoothing equity. And that's something I would suggest that you study in terms of using different currencies. You can use different time frames. You can use different types of robots, all those kind of things to smooth your equity. That's the key to the game. When you start trading a forex robot, it is critical to your trading success. So in other words, the day that you start is the most critical, because if you plug it into a bad market, it will damage your account and your psychological side will be so messed up that you'll just throw the thing in the bin. It's one of the most profitable EAs. I can't tell you how many people have asked me to swap the make money EA for some other EA, and it is by far the best EA that we have. But it takes patience, because it's like fishing. You throw your line in the water and you wait for the fish to bite. You can't expect it to go throw in and pull out straight away. You've got to wait. And patience is one of the biggest things. And that is why when you start trading, if you're lucky enough, and it does depend on luck in certain cases, you will plug a trending EA into a trending market. But you've got 10 other market types that you could be plugging into. So there is a bit of luck involved. But if you use lot sizing, then you will still sleep well, because you'll be in a loss phase, but you won't be losing your account. You'll be losing 5% or 4% of your account. And then when the thing changes, suddenly it goes up to plus 20%, and everything is fine. But it's also like buying shares. I mean, you buy a share, you don't expect the thing to shoot straight up. Sometimes it goes down, sometimes it goes up, and it finds its way up, hopefully over time. All right, so sorry, I'm digressing here. And don't ignore the fundamentals. They are what starts a big trend, and you need to be a little bit more advanced to understand the fundamentals. But some of the currencies are very easy to spot. The US dollar is most probably one of the easiest to spot when it's losing value, and and when it starts losing value, it's normally creates a bit of a trend. The same thing with the yen. You can actually spot yen weakness and strength very easily. US dollar strength and weakness very easy. And if you can plug an event to the weakness and strength of those currencies, then you can start using fundamentals to find trends. Now, a friend of mine works in New Zealand, one of the New Zealand banks, and he knew exactly what was going to happen to the New Zealand dollar over a 3-month period because of the fundamentals that the bank studies. They knew exactly. So it is possible to do it. We're not all experts, but it is possible to use your common sense and say, a virus, a solution to the virus has been created, and England has done it. So will the pound go up? Or whatever. Okay, so I hope I've answered these questions. Let's just go through them. It's not how long you back trade, it's the quality of your back trading and how you dissect the market, understand how the EA works in those different markets. How good is the market during COVID? any market will have one of those phases in them, a fast moving market or a slow sideways market. If you've got the phases under control, nothing will scare you in forex trading. After I've done the optimization and for the forward testing fails, it will fail, expect it to fail. That is just the way it is. If you're lucky enough, you will start forward trading in a trending market when you've optimized a trending EA. If you're lucky enough. If you're not, be patient. Use small lot sizing. Sleep well in the evening. Add more robots that offset the robot that you've just optimized. All those kind of things. The big picture is more important. The days of buying a robot, taking one setting, putting it in, and expecting your account to double are very, very few. Very few. You need to use that balanced portfolio approach. All right. Different brokers, just take it as given that different brokers produce different results. Even with the same time zone, they will produce different results. Don't take it. Don't think that that's an unimportant factor. And then drawdowns, as I've said, the portfolio approach is the way. So here's the portfolio approach. You use a balanced portfolio of forex trading robots, trading the ideal high probability trending currencies and settings when using trending EAs. And then there's a whole group of other currencies that you use for sideways, high probability sideways currencies you use for sideways EAs. So that's all you're doing, you're balancing. But within those EAs, you can, as you've seen, you can use set file 1 and set file now as 6 and those kind of things to balance your equity within that. So can you see how it all builds up? If you're balancing your equity within an EA and you balance each EA that you use and you're balancing EAs against each other, your probability of success in terms of risk management is so high, and you will earn a nice steady income with a smooth equity curve by using a balanced portfolio. Okay, so now, as I said, a lot of people say, oh, I don't have the money to buy. Now, there's this wonderful thing that's come out a few years ago. They call it cent accounts. And it's not the same as a mini or micro account. It's even better than a micro account. It's a cent account, and you need to just go and watch this video. And this is what I suggest you do. Never trade more than 0.01 for any EA. If you can afford to trade more, then rather trade another version of that EA. Don't put all your eggs in one basket. Spread them out as much as possible. Now these 1 cent accounts will enable you to build up a nice portfolio with only maybe $500. With $500 you can, that's 50,000, you can create 50 $1,000 accounts to trade. So this is an amazing facility. Please go and watch this video, and it will take away those limitations in your head where you say, oh, I can't trade the portfolio approach, and that's only for the rich. It's not. If you're clever and fast, you can do it. Okay, so we've come to the end of this video. Thank you very much for watching. If you're still around, I see it. It's going to be a pretty long video, but you must realize that there is a lot more to optimization that meets the eye. I haven't even spoken about the highly advanced methods yet, but you can see already how much more of an edge you get if you actually do this homework that I'm describing right now. We're actually putting those set files into our club for the members of the club to download. But remember, it's very limited. We've only done that for the pound. One should actually do it for all of the currencies and get the best set files that way. But I'd be interested if anybody is interested in a service that does this for you, because to do 81 optimizations is most probably not what a lot of people have in mind. We've got it under control. We've automated the process. It literally takes an hour or two to do all of that. It's quite amazing. But certainly, I'd be interested to see any feedback on that particular area. And also just general feedback on the content of this video in terms of whether you've learned anything new, whether you see any benefit in what I've shown you here, and certainly don't be put off if you find this too advanced. But it's important that you know what there is in the future if you are going to take forex trading seriously and forex robot trading seriously. And then once you at the advanced optimization and you've conquered that, then I can take you to the highly advanced level, and that will blow the socks off you in many ways. So from me, Alex Employee, thank you for watching, and cheerio.